Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March 8th. My name is Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. Although at the end of the day, we are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It is Unemployment Friday, the first Friday of the month. That's when the unemployment data is released. So let's get on with it without further ado. Nothing really across the pond as regards to economic data, but here in the United States, we did get our hourly average earnings, and that came in at 0.4%, expected to be 0.3%. Remember, we talked about this yesterday. We want to see earnings rise because that is good for the overall economy as the retail person or the regular person here in the United States gets a job, increases wages, they can start buying more things, right? And then that creates the velocity of money. One thing, though, that we did note was non-farm payroll employment change came in at 20,000, expected to be an increase of 180,000. A lot of people are wondering if that number is a misprint in a sense, because we got the unemployment rate coming in a little bit lower at 3.8%. So that would, give us the idea that we are very close to full employment as we see that unemployment number drop, but we're not seeing that hiring going on there. So it's a little bit of a conundrum. Last month's number, it was revised up slightly, so that is a good thing as well. And then we also got building permits. Came in at 135,000, expected to be 129,000. So remember, we can bowl as many permits as we want. It has to correlate to actually building. But in building starts, we got that in the form of 123,000 units started, expected to be 119 million units started. Last month's number was revised down just slightly. And later on this evening, we will get CPI out of China and PPI out of China. And Fed Chair Powell will be speaking at about 10 o'clock Eastern. All right, that's about it for the economic data. Let's move on to the overall markets. Markets are reacting to this data. You can see crude oil coming off. Most of it on that non-farm payrolls is really where we're seeing the weakness. I think that's really what's kind of bothering people at this point, because the unemployment rate can fluctuate based on people just not claiming, and it'll make it look like that number is going down. But that unemployment change, meaning people getting employed, only 20,000 versus 180,000, is really kind of a dark cloud over the overall markets today. You can see with crude oil coming off, that would implicitly imply that the market is signaling the economy is slowing in a sense there. So we are seeing crude oil coming off today. We've got the gold futures moving higher. Again, flight to safety going up and testing that 1,300 handle. That could get pierced and back and forth throughout the day, but a settlement in that 13 handle is really what the bulls want to see. But they are going to have to peel through some of that overhead resistance in the form of that 9-day moving average and the 50-day moving average. Okay, so right now we got short-term bearishness because we are underneath the 9-day moving average. Once the 9-day crosses over the 50-day, that signals even more bearishness. Okay, so we've crossed over the 50, but once those two lines cross, that is a signal for bearishness. All right, with crude moving higher, flight to safety, bonds topping out a little bit. We would have expected a little bit more follow through maybe from these guys, as Europe we saw talking about some type of monetary easing maybe needed coming down the road. Some of that being said, with interest rates coming off, bonds should maybe trickle higher. We are right in and around the sweet spot for this. I think it's really just a matter of the market kind of getting the weak hands out of the way before we kind of settle down there. We got the VIX. It was really spiking as the market was falling out of bed, but we've pretty much regained all of those losses throughout from the start of the day. You can see here with the Dow Jones Industrial Average, actually making it look like a very nice bottom. Monday confirmation to the upside, if we were to finish right here, would look like a nice little bounce and had, somewhat of, a pullback here. It's not quite the pullback I was expecting. I was expecting at least a pullback down to the point of control, but a pullback nonetheless is good for the overall economy, kind of fleshing out some of those weak hands, shaking it out. We can't just always go straight up. Again, similar with the NASDAQ, you can see it's still in negative territory by about 32 points, but well off of the lows, maybe even half back of the lows. And something to note, we have peeled back and above this Fibonacci extension here, migrating back towards the point of control, which is where I've expected us to kind of settle down. E-mini S&Ps have come down, tested that point of control, again broken through its Fibonacci extension. That is going to act as resistance, but more so a indicator when we settle above that. If we settle above that, that's going to look pretty bullish. If we settle down towards the low, it's not going to look like anything at all. So keep that in mind throughout the day on when you're setting up your trades. You can see with the data on the non-farm payroll, we got slammed. We have since started recovering. Basically, a lot of people kind of wondering whether or not somebody forgot to add a zero to that non-farm payroll change of 20,000. Maybe it was supposed to be 200,000. I don't think it's 200,000. I think that would have been a really big number and definitely not well above 200,000 for sure. Okay, so we're seeing this little bit of a rally back. Based on all of this stuff, I'm pretty happy with where my portfolio is, especially if we get somewhat of a settling down in and around this area. I was thinking about adding my my Amgen trade that I talked about in the daily market, in the webinar yesterday. I already have a position in with Amgen, and it would kind of cause me to get out of one of those positions. It'd be just a little bit messy with the trade that I was looking to put on. But Amgen did have a nice little pullback today, so if some of you guys jumped on that early, that was probably turning out to be a nice trade for you. That's about it for today. Everybody have a great weekend. Appreciate everybody's great comments this week. We were going back and forth a lot with some of the clients. I appreciate you guys reaching out. I hope I answered all your questions. That's about it. Other than, if you can't take that, take it easy. Have a great weekend.